Why doesn't BlackRock have an XRP ETF? It's one of the most common questions in the XRP community. And every time Bitcoin or Ethereum ETFs make headlines, that question comes right back. If BlackRock is one of the largest asset managers in the world, and if so many people believe XRP has a major role to play in the future of finance, then why hasn't BlackRock filed for an XRP ETF? Does the company not believe in XRP? Is there a legal problem? Or is something else happening behind the scenes? In today's video, we're going to break this down using facts instead of speculation. We'll look at how ETF decisions are actually made, what BlackRock typically looks for before launching a new investment product, and whether the absence of an XRP ETF should really concern long-term holders. Because here's the reality. Many people assume that if BlackRock hasn't launched an XRP ETF yet, it must mean BlackRock isn't interested in XRP. But that conclusion doesn't necessarily follow. Large financial institutions don't make decisions based on excitement or social media trends. They look at regulation, market demand, liquidity, custody solutions, trading infrastructure, legal certainty, and most importantly, whether launching a new ETF makes business sense at that specific moment. That's why it's important to understand what an ETF actually is. An exchange-traded fund, or ETF, is simply an investment product that allows people to gain exposure to an asset without directly buying and holding it themselves. Instead of purchasing XRP on a crypto exchange, investors buy shares of the ETF through traditional financial markets. For many institutional investors, that's a much simpler process. But launching an ETF isn't as easy as deciding to list one tomorrow. Companies like BlackRock evaluate many different factors before submitting an application. They consider investor demand, the maturity of the market, available custodians, regulatory developments, trading volumes, and whether the product has a realistic chance of attracting long-term investment. In other words, launching an ETF is ultimately a business decision. Now let's talk about XRP. Over the past few years, XRP has experienced significant legal uncertainty because of Ripple's long-running case with the U.S. Securities and Exchange Commission. While important legal developments have occurred, many institutions still prefer to wait until the overall regulatory environment becomes even clearer before introducing new financial products. That doesn't automatically mean they dislike XRP. It simply reflects how large institutions manage risk, and this is something many retail investors overlook. People often think institutions move first. In reality, institutions often move only after they believe the legal framework, infrastructure, and commercial opportunity are aligned. That approach may seem slow compared to the crypto market, but it's how trillion-dollar firms typically operate. So when someone asks, why doesn't BlackRock have an XRP ETF? The better question might actually be, what conditions would make BlackRock want to launch one? Because those are two very different questions. So what exactly could be holding BlackRock back? The first thing to understand is that BlackRock has never publicly said it doesn't want an XRP ETF. That's important. There's a big difference between not launching one yet and never launching one. Those are two completely different statements. Now, let's look at the factors that large asset managers typically consider. The first is regulatory certainty. When BlackRock launched its Bitcoin ETF, Bitcoin had already spent years being treated as a commodity in the United States. The market structure, custody solutions, and investor demand were already well established. XRP has had a different journey. For years, Ripple's legal battle with the SEC created uncertainty around how XRP would be viewed in the US. Even though the lawsuit produced important legal developments, institutions generally prefer the highest possible level of certainty before introducing products for millions of clients. That's simply how risk management works. The second factor is market demand. BlackRock doesn't launch ETFs because a community asks for one. It launches ETFs because it believes there will be enough long-term investor demand to justify the product. That means asking questions like, will financial advisors recommend it? Will institutions allocate capital to it? Will retirement accounts invest in it? Will the product attract enough assets to make commercial sense? These are business decisions, not emotional ones. The third factor is market infrastructure. Large asset managers need reliable exchanges, institutional-grade custody, deep liquidity, and operational systems capable of handling billions of dollars. The good news is that the digital asset industry has been steadily improving in these areas. Institutional custody has expanded, trading infrastructure has matured, and more traditional financial companies are entering the crypto space. That's one reason many investors believe more crypto investment products could eventually appear. But here's another misconception worth clearing up. Some people think an XRP ETF would instantly send the price soaring. History suggests it's not that simple. Even Bitcoin's ETF approval didn't create a straight line upward. Markets still reacted to macroeconomic conditions, interest rates, profit-taking, and overall investor sentiment. An ETF can improve accessibility, it can attract new participants, but it doesn't eliminate normal market behavior. Now let's connect this back to BlackRock. If the company eventually decides to launch an XRP ETF, it would likely be because multiple factors align at the same time. Greater regulatory confidence, strong investor demand, a mature market, reliable infrastructure, and a clear business opportunity, not because of one announcement, not because of social media excitement, and not because the XRP community wants it. That's how firms managing trillions of dollars typically make decisions. So perhaps the better question isn't, why doesn't BlackRock have an XRP ETF today? Instead, it may be, what still needs to happen before launching one becomes the obvious business decision. That's a much more useful way to think about it. So, does XRP actually need a BlackRock ETF to succeed? Not necessarily. An ETF can make XRP more accessible to traditional investors, financial advisors, and institutions that prefer buying regulated investment products instead of holding crypto directly. That could increase participation, but an ETF doesn't create utility. Real-world adoption comes from people and businesses actually using the technology, whether that's for payments, tokenization, liquidity, or other blockchain applications. An ETF simply gives more investors another way to gain exposure to the asset. That's an important difference. So instead of asking, why doesn't BlackRock have an XRP ETF today? A better question is, if BlackRock eventually launches one, what would that signal about XRP's maturity as an institutional asset? That's the conversation worth watching. Now I'd like to hear your opinion. Do you think XRP needs a BlackRock ETF to reach its full potential, or can adoption continue growing without one? Leave your thoughts in the comments below. I read as many comments as I can. If you enjoyed this fact-based explanation and want more XRP videos that separate facts from speculation, make sure to like this video, subscribe to OG John XRP Insights, and turn on notifications so you don't miss the next one. Thanks for watching, and I'll see you in the next video.